Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Unity Software, ticker symbol U. So here I am recording this on Saturday, April 19th, after Unity Software closed on Thursday the 17th before the long weekend at a price of $19.23, being up about 1.8% on the day and continuing up about 22 cents into the after hours to around 1% or so higher at 19.45. And so, yeah, I wanted to dive into the chart here, go over some levels that stand out to me. Did just adjust those during the stream and the levels. And yeah, just kind of wanted to dive into where I think this could be going to. And I have to say, a lot of this is inspired by some posts from the Bronx Viking on X. So here he has these two charts. Corporate wants you to find the difference between these two photos. The one on the left is Unity Software. The one on the right is SoFi. And he's just saying, straight algo mode, like the meme with Pam from The Office, saying they're the same image. And so here we have this, what looks like a bull flag formation. This is for Unity Software. And then over here with SoFi, we also have a bull flag formation. It looks like there's been a little bit of a breakout though. So maybe SoFi is a little bit ahead of Unity here. But yeah, I mean, this got me really excited to see some more bullish sentiment around Unity. And then also I did kind of a deep dive, which I'll go over this in a minute, based on, another post from the Bronx Vikings. So I'll also get into that. But I first wanted to talk about the stock chart and also just considering the max pain for Unity Software. We do see that for the 17th, for Thursday, prior to Good Friday and the Easter holiday weekend, we did have a max pain of $20, whereas, Unity Software closed below $20. So that's not such a great look, but this upcoming Friday on the 25th, max pain is 18. So maybe we could trigger, a gamma squeeze or gamma ramp if we do start to close above that max pain or start to push that max pain higher. The following week, though, beginning May, for the second Friday close on May 2nd, we have a max pain back up to 20, so maybe that would kind of suppress price a little bit. But then May 9th back down to 19 and 23 here, and so on. 23 might hold that down around May 16th. I believe that's the monthly contract expiration. But if price is notably above or right around 23, following that, the max pains are pretty reasonable. They're all lower than 23. So maybe we do start to see some nice price action into the coming months. And that is, in fact, what is suggested by these options flow charts. But, just coming back to the post, looking at the pattern here with Unity, that potentially being a bull flag pattern that may very soon be breaking out. Let's dive into the charts here. And so we can see that we do have, upside move with that big green candle here on April 9th, hitting a high on the day of $20.37, going up 19.34% on the day. Just a massive upside candle there, which we've seen across the market there. And really, this makes me think that low of 1533 was maybe cycle low for Unity. Do we hit all-time highs or go up to, let's see, 30 or so? I have no idea, but I do think that at least in the near term, 1533 is going to be the bottom. And so we can see this bull flag pattern. And if I do just pull up the moving averages, we can see that just above us, and maybe this is not such a great sign, that we will be bumping into resistance, maybe corresponding with that max pain coming up on May 2nd, that being at $20. Maybe that serves to keep the price down a little bit. With these moving averages just above us, the 21-day is the pink one there. That's around 1979. That does look like it is kind of the top of that bull flag pattern that the Bronx Viking highlighted here based on the highs from, let's see, I believe he has the 1 hour time frame here. And so that would be basically the high from here. And that was on the 9th of April. And then the high from the 14th of April, that gets the top of their 21-day moving average, does seem to correspond with that top. Just above that in blue, we have the 200-day moving average. That looks like it's around 2056. And then just above that, we do have the 50-day moving average at 2162. So that, really the $20 to $22 range, there might be some resistance there corresponding with those moving averages. But let's see, some things that I wanted to talk about here is that I had talked about 1538. I personally actually bought the dip there, not a huge buy or anything, but at 1538, just 5 cents above that low, that was hit on April 7th. How did I get that green line? Really, I guess you could say it's kind of arbitrary, but over here, when we were kind of consolidating above that level, I picked the low from June 20th, which was at 1538, and actually on June 21st, we hit a low of 1523. That would have been a greedy level because we only hit a low of 1533. So 1538 was a great dip buying level, that green line there, which was tested multiple times over here. So I thought, maybe it would be tested again. And, if I do scroll forward, we can see that was a beautiful retested level, a great dip buy. And from that level, we are now up, 25%. So looking good there. Also do have this purple line to the downside, and that was really, this is when I started to first cover Unity software. I believe it was requested during a Ticker Request Live, Sundays, 9 p.m. Eastern. I stream for Ticker Request Live, take ticker requests, go over them live. And Unity was one of them. And I started to notice this downtrending channel it had been in for a while. And then, hey, maybe there's this inverse head and shoulders pattern, did get a measured move to the upside and beyond. But that neckline, that was notable resistance over here. It might act as notable support. And we actually did see it bounce from that purple line over here. The neckline there also corresponded with, this 786. Which is actually the retracement from that all-time low, or the 52-week low, I should say, of 1390. That was hit on August 7th. And then going up to the high that we recently saw on February 21st, that was at a price of, $30.88. The 786 retracement from that, pretty coincidentally, corresponds with the lows that we were seeing here in November following, this move up here. And I believe that was actually the 618. So let's just see if I have that marked on here. Yep, the 618. The numbers are kind of overlapping there, but that does look like it's not the 50%, 618, 786. Yeah, so that's the 618. Just got the numbers all lined up there. So maybe if I do it nope, it's all just going to be overlapping there. But anyways, so that was a 618 retracement. Now we've seen that level be a 786 retracement, and there just being, a number of levels lining up there. So pretty interesting. And then also I have this orange uptrend. I will come back to that. But then, looking over here, we did retest that, that purple downtrend, the neckline, and, that would have been, a little bit of an aggressive buy, a little premature of a buy, because the low, let's see, I can't get this lined up. That would be around 1650. Could have gotten a more than $1 discount waiting for 1538, but still, maybe there's buy a little bit here at 1650 and then a little bit more at 1538. That would have been a really nice dip buying bottom there. And also the 786, that's at 1750. So really it's just these dollar discounts from 1750, 1650 And around 1550, that was all, very nice dip buying territory as far as I can tell. If we are forming a bull flag here, like the Bronx Viking is suggesting, then I would expect that we would get a breakout to the upside. And we have been holding 1844, more or less. That's the 382 from this Fibonacci retracement here. We have been holding that as support. But if we do break a little bit lower, I do have this alert here at, let's see, 1785. And that corresponds with the, 50% retracement from that Fibonacci. I just didn't want to have it cluttered. And, so that's, let's see, 1785. Is that what I said? Yes, 1785. So maybe that is a level to be, taking advantage of a dip if we do get that. Or, maybe just coming down to around 1750 or 1753, marked there by that 786. But I, to be honest, don't really expect 1750 to be hit because that was tested over here. We did kind of fake out break below it over here, and I do expect that this will be breaking out, that this is a bull flag like the Bronx Vikings suggest, because there is some bullish data with the options flow that I do want to go over with you guys. I do think that this could be breaking out to the upside. But where could this be going, really just based on the chart, forgetting about options for the time being? Just let's think about some levels to the upside. So I had this alert here, and this is at $23, and I was contemplating, well, maybe I want to adjust that. One of the options contracts is for 25 where this alert is. And so, I was kind of thinking, well, maybe that's a better alert to have. Although, let's see, if we do bump into that orange uptrend as resistance, getting up to 25, that would put, if that corresponds with that orange uptrend, that would put it, in July, the middle of July or so, getting up to that uptrend, that acting as resistance. I think that we're going to be seeing some upside moves well before July, really in the next 1 to 2 months, based on the options data. So I actually think that 25 is a little bit, I think that we'll probably, with that being said, I think that we'll probably be breaking above this green. Sorry, I don't know why. Sometimes I mix up orange and green. I'm not colorblind. I just think it's words. But I do think that we will be breaking above this orange uptrend. And but yeah, I mean, in more of a realistic time frame, 23, that would correspond with the middle of May, earnings right around here. So maybe we bump into resistance over the next month around 23. And then we break above, maybe corresponding with earnings, get up to 25, and maybe get up to this red downtrend, which did act as some nice resistance that we were able to kind of predict the top here. I personally, I think I sold some calls that I had here on this big green day, but not up here. I could have played that a little bit better, but the high that we hit on February 21st was $30.88. I've already mentioned that level. That was just below that thinner red downtrend, which if we look back in the chart, that corresponds with the first pivot point being, I believe, the high from August 12th of 2022, so going back pretty far in time. And this really corresponds with, the downtrend channel that I had initially noticed that we were trading in. And then the other pivot point, this looks like it's the closing price from July 19th of 2023. And then we did, retest that over here on December 27th of 2023 to start to form what I think maybe this is the left shoulder of an inverse head and shoulders pattern. And then bigger picture, we are potentially going to form the head of that inverse head and shoulders pattern, and the neckline for that would be around $43 to $45. So I find that to be pretty interesting. While we did break down below this orange uptrend, we still have, higher low here. And so we are still forming this head. So it hasn't been negated yet. So I could see that, by maybe believe it or not, by July, based on this drawing that I have here, by the end of July, let's say that we could be at this neckline around 43.65. So I think that looks really good, but we do have, like I said, resistance around 23.25 we can see here. That kind of corresponds with the intersection of that red downtrend, that orange uptrend. So that would be around 26, actually. It looks like right there, right on the dollar intersection there. So maybe could be seeing some resistance around there, then also getting up to around 30. So maybe this doesn't play out as quickly as I have drawn out. Maybe this we don't finish forming that head until the end of 2025, beginning of 2026. These things always take longer than we expect, so I could actually see that being a more realistic time frame. But with that being said, going from the measurement here from around $14 up to around 45, that would put the measured move to around, I believe, let's see. So I'm just going to pull up the calculator here so we can just do this. So let's see, about 43.65. So let's just say 43 minus down here around 14 bucks. Okay, so that's around $29. And then so that will be the measurement, $29. Add that to the neckline, so plus 43. This would be, an approximate target of where this could go if this inverse head and shoulders pattern does play out. So around 72. So I find that to be, really appealing for the long term. Do I think that's going to happen this year? Probably not. I feel like the high for this year would be around 43, but a high for 2026, 2027, 72. Yeah, so I feel like this is definitely a deep value play. Whether it's at 20 bucks, 19 bucks, 14 bucks, I think that this could be a really nice long-term hold. So that's kind of how I'm thinking about it, but I also think that this is a nice one to be trading around the volatility. And so that's kind of what I wanted to talk about with these posts from the Bronx Viking on X. And so I kind of dived deeper into this post that he had where he said, Unity Software, ticker symbol U, whale still holding over 20,000 calls that expire on June 20th. And so I'm just going to pull up these images and then we can dive into them based on the post that I have above. And a lot of this also kind of jumps into some tinfoil hat theory, just having some fun with it. Which comes from the Bronx Viking and also just, connecting some dots. Unity, Rick James from Dave Chappelle, and, a lot of stuff. There's a lot of U's popping up, and, so I will talk about that as well. But so this is, the $25 call. I talked about $25 potentially being an important level. About 2 months from now, expiring June 20th, that's the monthly contract expiration. And so what we can see for this contract is on April 7th. There was this big green candle that you can see there that suggests, a lot of buying for this contract. And so the candle volume was around 12,000 contracts, over 12,000. So that's buying of 12,000 contracts. The candle premium represents $878,000. And that represents the majority of the buying for that day. Daily volume, daily premium being very similar to that one candle there. And actually, that should be the exact same numbers because these are daily candles. So, but I expand upon this and actually dive into the trading for that day of this contract. And so what we can see, what Bronx is talking about here, is we see this big green candle. And we don't see any big red candles following that or any big candles corresponding size that suggests selling. And so this is, about 10,000 contracts. They're still being held is what it looks like. And then if we look at the other contract that he posted, this is the $30 call, also expiring in June for those monthly contracts about 2 months from now. We see another candle volume around 12,000 or, approximately 10,000. So 10,000 plus 10,000 is 20,000. That's what he's talking about. We see this big candle volume here, green buying. represents about $400,000, and we don't see any selling. So this whale is still holding, as he does suggest here. You whale still holding, and to be clear, he should probably say you whales. Potentially there are two, because there are these two contracts, 20,000 calls for June 20th. And so I find that to be pretty interesting, but because he just posted, the daily candles here, we can see that there's no follow-up to a lot of selling for either of these. So that does look really good, but I want to look at actually the data on those days. So that's what I do in this post. And so I'll just read it to you guys and then just kind of go over my breakdown of it. This is really just screenshots from Unusual Whales, and I maybe we'll dive in a little bit deeper to them, but I'm probably just going to go off based on these screenshots that I have here. And so I just say, thank you so much for posting these Unusual Whale screenshots, as they serve as a great example, or as great examples for me to explore. This channel is all about learning, whether that's my learning and diving into the stuff, or maybe you guys can learn a little bit from me. That's what this is all about. It's just like a little trading journal, having some fun doing it. And so from filtering UFlow data to April 7th through 8th and premiums to $100,000, greater than or equal to $100,000, I can see a few interesting or a few unusual things. And so that is referring to this screenshot that I have here. And so what we can see is I filtered it to Unity up there. And then also over here, you can see just the U there. I filtered it. I've also filtered the time to be from April 7th to April 8th. And behind Ed, so I might get him out of the way, we can see that I filtered the minimum premium to be $100,000. And so what we can see are these contracts that stood out as meeting this criteria for those 2 days. So these being contracts that were, these orders that were filled on April 7th, and then these above that white line there are from April 8th. And so I might, let's see, take a step back so I can just see what I wrote here. And so number one is a number of 10,000 or 10,000 sized orders, with most being purple. And so that means that size is greater than open interest, including the $25 and $30 calls expiring June 20th that were identified by the Bronx Viking. And so let's see, I can, pull that up here. This is, from Unusual Whales. We can see that these numbers here are purple, lots of 10,000. And so what does that purple mean? If I hover over it, I believe it should say, but let's see. What does that 10,000 mean? We can actually just click on the contracts here. And so this one at the bottom is the June 20th expiration for that $20 call, buy order. And we can tell it's a buy order, that it looks like it's a buy order because it's on the ask side. And so that is, going to be a majority on the ask side. That is going to be a more bullish sign, although that does not necessarily mean that they're all being bought, because sometimes buy orders get filled on the bid side. Sometimes they get filled on the ask side, usually on the ask side. But anyways, let's dive into this. And so what we can see for that day is, let's see, what did I want to, I might be diving into the weeds a little bit here, but we can see that spike for that, let's see, these are the 30-minute candles. We can see a spike here. That is the, over 10,000 contracts. But so what we can also do, maybe I'll just do the kind of the example here. What I did is over here, once I've kind of opened up this contract, I can filter it by the date to be, let's see, this was from the 7th, so I can filter this to be the 7th. So that's the most recent date. And then, if I go back 90 days, we can see that, this is the first time, basically in the history of this contract, the past 3 months, that we've seen this massive buy. And then we can also pull up the data from that day. This is the premium net call and put premium data from that day. And the net premium from April 7th was an increase of, $500, almost $60,000. Let's see. Yeah, so this is from April 7th. I might actually be because this is for all contracts. This actually shows that net call premium came down on that day. But for this specific contract, a $25 call expiring in June, we see this massive bump. So, the data over here, it's not really that useful in identifying, hey, this is an unusual position that was opened on that one specific contract. But anyway, so that's how I filtered that to be that day. If I make it to be more recent, we can see the more recent data there. Going back 90 days, let's just go back 14 days. We can see that there. But yeah, anyways, I'm going to get lost in the weeds with that. So I'm just going to pull back up this post so from this, we see the purple there. These had the volume traded on that day greater than the open interest. And then the next point that I make is, from April 7th to 8th, open interest increased from less than 10,000 to greater than 21,000 for the $25 call, and was 20.8 thousand on April 17th, so on Thursday. And so I got the little bull emoji though. That makes me think that it's fairly bullish. And so, just like I had shown over here, let's see, I filtered this by, going back to April 7th. And so I have multiple days here, but if I just isolate it to one day, we get the kind of higher resolution, action for this contract for that day. We do see the alert here with that exclamation point up here. Volume has exceeded open interest. So that looks really good. And that is, why we see, where was it? From the table, that is, oh no, not that one. Sorry, I'm jumping around. If I switch back over to this image, that's why we see the purple 10. Oh my gosh, it's behind me. I'm sorry. So I'm going to just have to remove myself for a second. So we see these purple, green, these purple green. See, I always just want to say green. So we see the purple numbers here, the 10,000s, also the 16, almost 1,700. That means that the volume traded was greater than the open interest. And so that suggests, positions are being opened, whether that's sold to open or bought to open. These that are on the ask side, very clearly, they seem like they were bought to open. And so this is the, $25 call that expires in June, as I'm talking about. And so I'm just going to pull myself back up here. So for that contract, we can see the data, which is, the same data that I have over here. So let's just make sure that is correct. Yep. So that is the June $25 call that and this is for the date of April 7th. And so we have the exact same data over here. And so from that screenshot, I just am hovering over the candle. And so we can see that, basically, 10,000 contracts opened, what it looks like for that candle, that one buy. Maybe that's Roaring Kitty, maybe it's not, no idea. And then from my post, let's see, and I might actually, so I've got it over here. So average fill was at 73 cents. And so average fill 73 cents. So that's good. So I'm just going to escape from this so I can read, what I have said here. So open interest increased from 10,000 to 21,000 and remains right around 21,000. And so what we can see is that from the 7th, open interest at the start of the day was less than 10,000. We saw a volume of around 12,000 on the day, but an increase of around 11,000, going up to around 20,000 at the start of trading on the 8th. And then if we do look over at the data over here, we can see that from the 17th, open interest is still, right around 21,000. So the 10,000 contracts that were opened, they're still being held. So that's a good sign. And then coming back to my post here, the third point that I have is from April 8th to the 9th, open interest increased from less than 12,000 to greater than 22,000 for the $30 call that Bronx also pointed out, and was 22.1 thousand on April 17th. And so I have that highlighted in this third image. So from April 8th, I have it filtered to that daily data. We can see that candle was, exactly 10,000. So very similar to the other order. And we can see that it was less than 12,000 at the start of trading on the 8th. We saw a volume of over 12,000 on the day with an increase of over 10,000 in open interest, leading to an open interest of around 22,000. And then if we go over to this custom flow here, and if we look at that $30 call that expires on June 20th, we can highlight that to look at the data a little more closely. If I filter it over here to April 7th, we can see, sorry, not April 7th, April 8th. It's like, why are there red candles? This doesn't look right. So, always got to make sure things make sense. From the 8th, we can see that big spike. And actually, because that was 10,000, and looking over here on the 8th, open interest was, more than 10,000. We did not get an alert here for that order until later in the day. Volume has exceeded open interest. Volume is over 12,000, whereas open interest from that day, which if I scroll down here, we can see open interest 11,839, so 11,839. So we should be able to see that number here. Open interest 11,839. So that makes sense. Volume at that point has exceeded, but not because of this whale buy, which maybe Roaring Kitty, maybe not. I don't know. And and then now the open interest is still above 22,000. So it does suggest that, there is a buy there. And if I do switch this back over to the 17th and I go back 14 days, we can see that buy over here. And we haven't seen any massive sells or anything like that. So that does make me think that this whale is still holding, as the Bronx Viking suggested. And then going on to the other point that I have here is there were multiple greater than $1 million orders on the 7th to the 8th, although I'm not certain all are long, since some filled at the bid, whether that's sold to open, which in my understanding would be like selling covered calls. So it's like there's no open interest. Let's say open interest is 0, and I have hundreds of shares of Unity software. So I could then sell covered calls that would then open these contracts in the options data. And so that would be selling to open, selling covered calls. So that's bearish, or that's just hedging. And so that, with Max Pain, like I was just talking about, being 18 for this coming Friday, maybe we see a dip buying opportunity with Unity. So I find that to be pretty intriguing. And also, not getting paid for this, but just with this note down here, Easter sale until April 22nd. So get 20% off options flow upgrades, or I believe 15% for getting packages. I already have a subscription to it. I love Unusual Whales. I'm learning a lot with it, so I'm not really able to utilize it fully just yet, but I do think that it's a great tool to have. But anyways, with those, possible covered calls being sold, maybe we do see a pullback to around 18. and then maybe we start to go higher. I don't really know. So maybe maybe we'll see those covered calls get bought back on a little bit of a pullback. So maybe I find that to be interesting. And then, so coming back to this, looking at, the filter that I have just for the 7th through the 8th, we can see, multiple $1 million orders. So initially, I should say that $25 call that expires in June, there's only $730,000 behind that. So it's not $1 million order, so nothing to get too carried away about. But then we see this $20 call that expires in September, 153 days to expiration. And that was on the bid side. So that suggests, that it's bearish, that it's, sold to open. But that could just be some hedging. We also see another very similar contract, $20 call on the bid side, but that's for the June 20th expiration. And that is, on the bearish side because the majority of it is on the bid side. Both of these over $1 million, both of them being 10,000 contracts. So I find that to be pretty interesting. All of these 10,000 contracts. And then we also see a leap. This is for the January 16th expiration of 2026. So a little less than a year from now, 272 days to expiration. That's the $25 call also being bought on the ask side. So that is bullish. That represents $2.43 million. So we have multiple over $1 million, two of them being over $2 million, but some of them potentially being hedging for the possibility of maybe a little bit of a pullback. And so we can actually, I'm going to dive into the weeds on this one. I'm sorry if this video is too long, if this is too long in the stream, how I am recording this, but we need to dive into this data. And so I'm just going to filter this again to, let's see, the 7th, so we can see that this is, we got this alert up here. Volume has exceeded open interest, so that makes me think these are covered calls. Somebody owns, hundreds of shares. This would be hundreds of thousands of shares because, so the volume is, let's see, 10,000. And if we pull up that handy dandy calculator, we can see 10,000. So we got 10,000 contracts, and then let's multiply that by 100. That represents, 1 million shares. So whoever, let's say, sold covered calls here, they potentially had, 1 million shares. And so from those 1 million shares, if those are to be sold at $20, that represents about a $20 million position there. That's pretty hefty. So maybe that's, tinfoil hat. I don't know that there's being sold as covered calls. I don't really know. But if we do look going back the 90 days, really, there's been nothing earlier on. More recently, we've seen some blips here in like February, March, but we see this massive spike in volume on the 7th. That candle volume for the entire day is just over 10,000. But if we do look at that contract, we see that it was a $10,000 order. So is this the one that maybe I shouldn't have taken a step back. Was this? Oh, yep. So I need to just, filter this again to be April 7th. And so we see, what we were just looking at, 10,013. Candle premium, $2 million. So that is like saying, if this was somebody who had 1 million, was it 1 million shares? Let's see what it pull up on that calculator. 1 million shares. To then be selling them to be collecting. Wait, let's do this math again. So that's 10,000 contracts. Each contract represents 100 shares. And so that's 1 million shares. Let's say somebody has 1 million shares, and then they sold that covered call to collect a premium. Let's look at the premium. That's something that we need to do. But if they were to get out of their position, if it were to be exercised, that they would be getting paid $20 per share. That would represent $20 million right there. So, and with current price being, right around 20, it's nothing too crazy. But if we scroll down here to look at the average fill for the 7th, the average fill was around $2.70, and we should be able to see that highlighted here. Average fill for that day, $2.70. And so that's 10,000. So another way, oops, I didn't mean to escape that. I meant to pull up the calculator. So I'm going to have to, actually, I won't backtrack because we don't see any big candles here following that. So this is going up to the 17th, as you can see here, date through Thursday, the 17th. So that's going to be over here. And so the 7th is right there. So that $2.70 fill with times 10,000. So let's just clear the data on the calculator. So $2.70, okay, times 10,000 contracts. So that person got paid, $2.70 times 100 shares. That person got paid $2.7 million for selling all of those contracts as covered calls. And so maybe that's bearish. That's saying that, price might be going below $20 a share. And then they would then want to buy those contracts back or their shares back when price is below 20. So that's kind of what that suggests. So maybe it's a little bit bearish, but maybe it's a little bit bearish short term, considering that max pain for this coming Friday is 18. Maybe we see dip buying opportunities leading up to that. So I find this to be pretty interesting, but it's a little tough for me to wrap my head around this because this is selling to open. I believe that selling covered calls, I would say that's probably just hedging based on shares that are probably already held, 10,000 shares already held. But we can look into these other contracts as well. So here is one. This is a $20 call that expires in June, again on the bid side. So that makes me think this is somebody selling covered calls. And so what we can see here, if we do scroll back to the 7th, so we see that date up here, we can see this big spike here. So we did see back here, candle volume. Oh, this is over the past 90 days leading up to the 7th. That's the most recent day on this chart here. We did see some buying of calls here. And so that was, 3,000 contracts opened is what it looks like here. And this was on March 10th. So maybe some of those were sold here, but that doesn't really make sense to me because why would somebody buy these contracts, an average fill of $4.15, and then sell 3,000 of them down here at an average fill of $1.66? That will be selling at a loss. So that doesn't really make sense to me. I think that this is probably just somebody going long, and this candle premium, I should note, is $1.3 million. Maybe they were just early, and maybe they also just had a bunch of shares. So maybe when they were going long here, when the stock price was, let's see, on the 7th. So maybe I want to go back in time to the 10th of March. So I'm just scrolling down here to see the 10th of March. So we can get the data from that, and I can just zoom into the 1 day here. And this, hey, kind of got an alert there. Volume has exceeded open interest. It says over $1 million going long. And for that date, we see, this spike in, this is all contracts, so maybe you don't necessarily want to be looking at that too much. But if we do scroll back in time here to March 10th, we see that open interest on that day was less than 3,000. But then we saw volume exceeding that open interest of over 3,000. And then we see open interest increase by about 2.6, almost 2.7 thousand contracts, going up to around 5.4 thousand contracts being open. And moving forward into the future, we still have over 5,000 contracts open. Now getting into April, now see 6,000. And then on April 7th, when we saw the other, the big sell is what it looks like, we saw open interest of over 6,000 with a volume of 11,000. And so maybe I actually want to adjust this to be that day, which was April 7th. And so here, this should be the same data we were just looking at, where the cursor is. Open interest of over 6,000, and then volume going up by 11,000, and then that open interest increasing by 9.6 thousand. However, that looks like it was sold to open. So that looks like it's more on the bearish side or hedging side. And so the open interest here is now, over 16,000, now still, above 15,000. And so I think that those, from the 3,000 contracts, it was really, that were opened on March 10th. We had, 6,000 open interest, and that only increased by about 10,000. So I think that, this is, these contracts are still open, but they're, more on the short side. So maybe we do see a pullback corresponding, with Max Pain coming up for this Friday of 18. I think that we could be seeing some dip buying opportunities in the short term is what this makes me think. But then if I do escape this and then look at this other, still, looking at data from April 7th, this is the $25 call that expires in January. This is on the ask side, so this is more bullish. This is a leap. This is over $2 million. It looks like going long for the January 16th expiration. So if we just look at that and we do look at the data from just the 7th, so we get some high resolution data there. This is just one day. We see towards the end of the day, $2.4 million going long. And then if we do look back the past 90 days, we can see that, this is the first really big position opened on that contract. And, open interest, we got an alert there. Open interest volume has exceeded open interest. So prior to the 7th, open interest was around 4,000. And looking back in time, 90 days, we don't see anything really too notable until, got these spikes here. There's some spikes back here as well. But, there's some, I'm not going to dive into the weeds too much. Clearly, we see something spiking up here that looks unusual, that stands out. Candle volume of 10,000, whereas the candle volume over here was 2,000. And that was back in December. So that's kind of noise relative to this big spike. And then if I do adjust this to be on the 17th, so the last trading day, over the past 90 days, this, really stands out as, a buy signal at a bottom. So that looks really good. And then if I just adjust this to the past, I think I got to do 14 days to include that candle. We don't see any selling following that. So it does seem like that position is still being held. And so I might adjust this to the 1 day and then adjust this back to the 7th. So we just see that one big buy there, over 10,000 contracts open, premium over $2 million. And then scrolling down here to the 7th, 4,000 contracts that were previously opened, then a volume of over 10,000 contracts. And then we see the open interest increase, by over 9,000 contracts. And that open interest is then 13.8 thousand. And then we look scrolling forward into the future, 14,000. And still we remain above 14,000. So that is bullish long-term contract strike, $25 above current price of around $19.50. And this, this is a leap. That seems pretty good. I could do some math on, the fills for this. Let's see. This was the average fill for this was, $2.43. That has increased to the average on Friday was $2.73. So they're in the money right now. They're not in the money because the contract is still below that strike, but they're green. So that's pretty interesting. So two of these make me think that this is bullish, both in the coming 1 to 2 months with the June expiration here for the $25 call that was on the ask side. Also in the longer term with the $25 strike, but with the January expiration that was also on the ask side. So both of those make me think that, really between the two of them, millions of dollars, or combining the two of them, over $3 million going long Unity. But that when we see here, with these two contracts that were opened on the bid side, $20 strikes with the expiration of June 20th and September 19th. So 62 and 153 days between now and expiration for both of those. Those make me think that that's a little bit of hedging because of max pain being below 20 for sometimes between now and June 20th. And also, but then getting up to, September, we don't see, between now and June 20th, there are some max pains that are sub 20. So it would be a good idea to hedge a little bit, or at least to prepare for getting below $20 a share. And so if this does dip to 17, which is the max pain for May 23rd, that could be a nice time to buy back those covered calls and then to go fully long Unity with strikes at 25, 30, above 20. That seems pretty good. So I feel like those could be just some like hedging maneuvers around, what Roaring Kitty or whoever this is might be doing with that. And then to look at the other contract, I'm spending way too much time on Unity here. But what we see up here is actually there's another one that I want to look at. I'm sorry. But this is the $30 call that the Bronx Viking pointed out that expires in June on the ask side. I've already kind of talked about it. 10,000 contracts opened. This is a premium of only $330,000, so not that exceptional. But what we see, another position, and this one is actually also very interesting. This one gets me excited. This is the $25 call that was on the ask side. So this is a buy to open is what that suggests. Call that expires September 19th. 153 days between now and expiration, another 10,000 contract order, $1.6 million on this one. Because it's on the ask side, this is net bullish. 10,000 volume, so this looks really good. And so that was from the 8th, so I'm going to filter this to the 8th. Take a step back, we see we got that alert there. Volume has exceeded open interest, over 10,000 volume there. And if we do scroll down to the data here for the 8th, we can see that the open interest was 4,800, as we see up here from this alert. So that makes sense. And then the volume was, at that time, over 10,000. But then for the day, the volume ended up being nearly 12,000. And from that open interest being at 4,800, it goes up by over 10,000 to put the open interest at 15,000. And then let's see, it does dip back a little bit. Some sell-offs happening following that. decrease of 365, then an increase of 18. And then if we look from about 15,000 there, we're now at 14.8 thousand open interest. So still the majority of this being held. And then if I just take a step back, so this is not just the past 1 day, but the past 90 days, we can see that there was some price action or some contracts being bought and sold, some trading of this contract in the past 90 days, as this is filtered to the past 90 days up here, but nothing that stands out so much as this candle that we see here on the 8th of April. And then so from this, now that I have, let's see, the 1 day there, we see this spike here on the 8th. Let's actually adjust this to the past 14 days from the 8th, but then I will adjust this to the 17th. So we can see that from that big buy on the 8th, we don't see any other big candles here. I can't make those candles any bigger. But yeah, I mean, from that, we don't see anything that exceeds this. That was an average fill of $1.60. The current average fill was $1.59. So basically the fill that this person got, 160, that was the average fill on Thursday the 17th. So still right around there, still in, dip buying territory if this was a good dip buying opportunity. So I think that looks pretty good. September 19th, there's more time between now and that expiration. It's not hundreds of dollars for this contract, or it's $100+ for this contract, but it's not like you got to put thousands of dollars down to buy one contract. So or hundreds, plural. This is 160. So yeah, I mean, I think that this is pretty exciting. And let's see. Yeah, I mean, this is just bullish, more bullish data there. And then we do have these puts here, but these are, smaller sized. This one, was, volume exceeded open interest. But this is the $16 put. This is already expired. It expired a couple days ago. And so this was a put on the bid side. So that's bullish. This was a put on the bid side. So that suggests that this was being sold, and selling a put is bullish. And we did in fact close on Thursday the 17th at 1923. And so this was a good maneuver for them to get out of that position because it went to zero, because we closed above 1650. Same, actually not same with this one, but they sold this. So that is, bullish. Selling a put is what the bid suggests, that it's, bullish. All of this bullish here. So that looks good. Yeah, same with this one. Selling this. This is for August. This is for August. Selling these puts, that's bullish. And then one other thing I wanted to do before flipping back over to X real quick is I just wanted to expand this search criteria to be the past, all of the days. And do we have some other big orders? Hey, look at this. Wow. 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 What we see here is on the 9th. This is not that interesting because the size was less than 500. But on April 10th, we see ask, so that's bullish, suggesting buying of a $20 call. That expires. Oh my gosh, this is the one I was just talking about. Or no, this is not the one I was just talking about. The one I was just talking about was the $25 call. Oh my gosh, Unity is getting stacked. $20 call expiring January, 10,000 again, 4.4 million. Oh my gosh. This is, looking really good. And so let's just make sure that from the 10th, we got an alert here. This trade was part of a flow alert, click for full context. And this was also, trade was to open. So that does suggest that this is bullish on the ask side, buying to open. So let's just look at this contract, 4.4 million. That was on the 10th. And so let's filter this to the 10th. we can see going back, let's see, 90 days, nothing really relative to that in the past. And then just looking at that one day, 10,000 candle volume, 10,003, $4.4 million. Let's just scroll down here on the 10th so we could see that open interest was 8,000. Saw a volume of nearly 11,000. Volume increased by 10,000 to around 19,000, just a little bit below. Where is it at? Still, around 18.9 as it was back here. So this is still open. Then if I adjust this to be the 17th and go back the past 14 days, we can see that little candle there. Actually, 1, 2, 3, 4, 5, 6. I could do 7. I could have been doing 7 this whole time. Dang it. So we can see here that big spike there. We haven't seen a selling of this. So $20 call to January, 272 days to expiration. This is where, these get expensive. $4.38 was the average fill on Friday. Their average fill was $4.40. So still around the same price to get one of these contracts. This is, this is unusual. And this is bullishly unusual. Unusually bullish. So that looks good. And then we see some more. We don't see any more 10,000 contracts, but we do see a 5,000 order being picked up on the 11th. This is a put. So this was a good move for this person because this suggests that this was to open. So it seems like they sold to, let's see, they were selling some cash secured puts, maybe. I'm not sure. A little tough for me to understand the nitty gritty of contracts, or at least I'm not at that level yet of understanding. But this was the $15.50 put that expired on Thursday, on the 17th, and they were selling, so that was a good move, I'd say. And because it closed at 1923, so above that, so that was a good move, 5,000. So yeah, but that seems really good. And then so coming back to this post, just to kind of summarize, my impression is that it's net bullish for the next 1 to 2 months. So really leading up to June 20th. And that's what I said here. Likely not beyond, because I suspect at that point that IV or implied volatility will be needing to cool down at that point. And so for holding shares, sure, probably safe bet long term in my view. But there would probably be a cool off, a pullback, and the premium on contracts at that point after June 20th, or maybe leading up to June 20th, would probably be cooling down. And then there's also a bit of hedging mixed in, and that could be just corresponding with the max pains here, being 18 for this coming Friday on the 25th, being 19 for May 9th, and then being 17 for May 23rd, as well as 19 for May 30th. So I think that we're probably going to be seeing price action below $20, and so might as well hedge a little bit by selling some covered calls. If there's going to be a pullback to 18, 19, or maybe even 17, those would be dip buying opportunities in my view, is kind of what I'm thinking from that. And then as all 10,000 positions are still open, and additionally, we are seeing another 10,000 contract position being open at $4.4 million from April 10th. So looking really good there. And then since there were so many 10,000, I'll highlight this. Since there were so many 10,000 orders, this makes me think they could be made by the same trader, just having a similar trading strategy. And I like the tin foil that it's Roaring Kitty. And so I'll dive into a little bit of evidence from that, potentially being Roaring Kitty related. But then also, Treehouse, and this is Treehouse Brewing, which during Roaring Kitty's last stream, he held their green can, which couldn't see because of his green screen. But their green can, Treehouse posts a lot of the green cans maybe corresponding to when GameStop's bottoming or about to rally or something like that. Again, this is like tinfoil hat theory. But then they also have this Unity beer. And so Treehouse Brewing, the Wanaka tree featured on Unity holds a special meaning for us at Treehouse. It anchors our annual journeys coming back around, maybe with GameStop, maybe with the memes moving like they did last year, to New Zealand. A steadfast, reassuring presence, quietly resisting the pull of the squeeze of time, even as it inevitably yields to change. So maybe this time's going to be a little different. Unity is an absolute crusher of a stock pale ale brewed entirely with Nelson Sauvin hops, which we hand-sourced from New Zealand. So this beer is lighter than air, floating up, while totally saturated with these special hops. It has wild aromas of gooseberry, crushed grape, and citrus peel. Squeeze. So, I don't know. I like this. And so a lot of the tinfoil on Treehouse, Unity, and, the green can comes from the Bronx Viking. But one thing, I did get some comments on this post. Let's see. So show probable spam. So I didn't think I was actually responding to this guy. I don't know who he is, but, and so, I was just saying, in Roaring Kitty's last stream from a year ago, Roaring Kitty mentioned Treehouse because I think his buddy owns it or works there, and the beer he drank during his stream was their green can. Whenever they post the green can, GameStop is bottoming before a rip. Not really sure, major tinfoil, but it's fun. And so, this is their last post on March 10th when GameStop was kind of starting to bottom before they moved up about 25% or so. And this guy responds, love it, grokked it. Also, see if what connections there might be. Saw similar. I do think with all his other posts leaning into literal use of Unity, the stock profile matches his thesis, and this tie-in, it's a little more than coincidence at this point, in my opinion. LFG. And I say, also the U falls on the guy's head. LFG for real. And so let's just open this up so we can see. And so, there's a sad dog, Panucci's Pizza. I don't really know the origin of this. I think it's like Family Guy or Family Guy, Simpsons, I guess. But what we see in this, and this was pointed out by the Bronx Viking, is that, there's going to be a nice little couple coming up here on kind of a fall day. Let's see, wait for the couple. I guess in the next season, winter, the dog's still there. He's sad. He's GameStop. Now there's this couple that it hits the guy in the head. Unity Software. So, there's something there. And then just to look at some more of his posts, this is the one that we just went over. Unity, Rick James, B. That's his ring right there. It says Unity on it. What is in the box? This looks awfully similar to, their logo here. So, I don't know, tinfoil hat. And then also Time Magazine cover. This is the U cover. U. And also lots of tinfoil around this. Time here. 1 minute 1 minute 9 seconds would translate to 69 seconds. Some stuff related to GameStop with that. I believe that Buck the Bunny posted a video that was 1 minute and 9 seconds long about his return. And then 420. 420 is upon us. It's tomorrow. And so maybe that's related to GameStop. Maybe that's related to Unity. Maybe that's just related to meme stocks. I don't know. I've liked all of these before, and the likes go away, I guess. And maybe he dropped Chewy and started looking at Unity, in addition to GameStop, of course. So, he still has this pinned tweet. That's all for now because I'm out of breath. For your information, here's a quick 4-minute video I put together to summarize the GameStop bull case. It's followed by some other deeper dive GameStop videos. He hasn't removed that pinned tweet. I think he's still bullish on GameStop, but I also think that he might be bullish on Unity Software. This, to me, does make me think it is a deep effing value, which corresponds with a Roaring Kitty style of play. And I think that we could be heading up here to test the neckline in the next 1 to 2 years. And between now and then, I definitely think that we could be getting up to 20, where we're at now, effectively, 25, 30, corresponding with the strikes. And I think that we could be going beyond those levels, potentially squeezing, whether it's up to 30.88 or maybe 45 around there. So, if we are going to see like a repeat of last year, and we didn't even really see that with Unity, did we? Let's see. Last year, what did we see with Unity? May of last year. Yeah, we didn't see much. So maybe there's something different going on this year. Not only maybe we see some moves with GameStop, with AMC, but I think that Unity Software, in all honesty, just looks phenomenal here. And if we are getting dips to 19, 18, 17, corresponding with those max pains, I think that those are going to be dip buying opportunities, whether for shares, contracts. You do you manage your risk the way that you want to. This would be a fib extension. I'll be suggesting a move to around 32 for Unity. So that's just a fib extension from the low here, August 6th, around August 5th probably, and then beginning of April, up to that high that we hit in March. So that's that fib extension. We see the 100% move, which is basically just the distance from this low, 1390, up to that high of 3088. Taking that same distance from this low over here brings us to around 30. And then if we also scroll up, the 1618 brings us to around that neckline. So I find that to be a pretty compelling level there. So I will probably add this to the video on Unity. So I'll just throw this in there at the end. For me personally, I'm excited about the possibility of this getting moves up to 25, 30, and maybe into the 40s in the next 1 to 2 months. I don't think that they will be sustained. I think that we will see a pullback. But I also think that we could be getting rejected from 30 again. And so I will have a plan for that. And maybe then we flip this orange uptrend into support, kind of like how I have doodled here, but time frame levels, I'm probably all off with them. But yeah, I'm just super stoked about this. And I'm really excited to see that there's another contract, that $20 call that expires in January, that also has another 10,000 position opened on it. So I just think that that's super, super exciting. And so, as always, with that being said, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching.